One of the key talking points, not only just in 2016, pre 2016, even sort of post 2016, is the idea that institutions in the UK, be they economic, financial, the UK market, whatever, was essentially being held back by being in the EU because of all these terrible, awful regulations. But of course, they would never really tell you what these regulations were, or even in some cases, why these regulations were brought in the first place. As we've always said, when you really look at regulations and you look at the reason why that regulation exists in the first place, you very will often find, well, this was the reason why this regulation was put in the first place. And there has been a lot of talk, especially in the past sort of week or so, of course, by Jeremy Hunt and Rishi Sunak wanting to recreate a Big Bang 2.0. This would be removing a lot of the 2008, especially reforms in sort of finance and sort of banking that were not only brought in by the EU, but also brought in by the at the time the UK government to help deal in the response to the 2008 financial crash, which was very, very much powered by the massive deregulation that had been done in the 80s by Margaret Thatcher. Now, of course, it wasn't all just, shall we say, to do with the UK. It was more, shall we say, the economic problems in the US that had a massive ripple out effect. And of course, other countries were caught in the crossfire. Because again, America's financial institutions are so big that the ripple effects will reach other countries, just as we saw in 2008. And like I say, many companies failed. We don't have to sort of, go over the full situation. But of course, the fact that we also deregulated our banking system did also hurt us quite a bit. And of course, they now want to get rid of many of these regulations that were brought in the wake of 2008. Because, well, it is their belief that if they do this, it'll be, Big Bang 2.0. But of course, powered by Brexit. But of course, again, Brexit is not, shall we say, the key to really doing this, especially as you are seeing sort of France and particularly Paris overtake London in being one of the most important financial capitals now not in Europe, but also potentially the world at the moment. Like I say, we always said it. If we leave this, London's start as the big financial capital is at risk. And not surprisingly, what has happened? So anyway, today we're going to go have a look at some of these interesting rules, laws, and regulations, and of course, the consequences potentially behind some of these actions as well. So, as always, please do remember to hit that like, share, and subscribe button. And of course, down below there are links to my new my Patreon page, and of course the one-off link called Buy Me a Coffee, where you can buy me coffee. I'm forgetting it, and I've said this every video, but never mind. Of course, there's the YouTube thank you button, and of course, there's the Pony Club you can join as well. So, as always, let's go over and get started, shall we? So, this comes from the New European with the title of This Isn't Big Bang 2.0, it's a SPIVS charter necessitated by Brexit. If you elect a flag-waving blowhard as a prime minister, eventually he's going to pose for the cameras in an army jacket. If you elect a Goldman Sachs guy, eventually he's going to deregulate the banks. Nobody outside of Parliament actually elected Rishi Sunak, but he has wasted no time in unleashing a massive round of financial deregulation. With the bankers' bonuses already uncapped by his predecessor, Sunak has slashed the surcharge on bank profits, abolished the ring-fencing that protects savers from speculation by their banks, and replaced Solvency II, the EU regulation designed to stop insurers going bust. For good measure, he's also scrapped the law that holds senior managers in the banking sector responsible if things go pear-shaped. The whole thing is being sold as Big Bang 2.0. A repeat of the financial deregulation bonanza that Margaret Thatcher unleashed between 1983 and 1986, transforming Britain into the international finance centre and, of course, 20 years later, the epicenter of global financial instability. It is, as claims Chancellor Jeremy Hunt, essential for Britain's growth agenda. In fact, it's a SPIV's charter necessitated by Brexit. Britain's challenge as a financial centre outside the EU is clear. More than £1 trillion worth of investment have fled the banking and insurance systems for the European Union since Brexit. Amsterdam is supplanted London as the centre for trading European stocks, and Paris last month has overtaken London as Europe's most valuable stock exchange. Meanwhile, the European financial regulator has signalled it will force large parts of London derivatives markets, worth a staggering 26 trillion a year, to relocate to trading platforms on European soil after 2024. Brexit was always going to be a recipe for long-term decline for London as a financial centre. But the offset was meant to be doing business with the rest of the world. The very brogues of the Oxford-educated finance guys would click down the corridors to corporations across the Asia, Central Asia, and the Middle East, if no longer in Frankfurt and Milan. The only problem is that to do that kind of business, you need a rules-free environment. And you need to be able to put your entire country in peril of bankruptcy if by underwriting the risks and managing the money of highly volatile and corrupt economies. And effectively is what Big Bang 2.0 is all about. Any idea that it could also trigger a repeat of what Thatcher did in the 1980s is ludicrous. Thatcher's Big Bang cut the grain of the economic history. By the mid-1980s, the Tories were riding a global upswing. They were also constructing a new economic model based on mass homes and shared ownership, with the cheap credit replacing high wages and resurging price inflation built in. The defeat of the miners' strike had just as much to do with that as the abolition of the open outcry in London's stock market. The result was inequality surged. Britain's G&G coefficient leaped from 25 to 35 in the 1980s and more or less stayed there ever since. Canary Wharf turned from a post-industrial wasteland into a mirror glass utopia, while the once thriving towns in the rest of the UK went in the opposite direction. Even if you wanted to try and repeat this so-called social economic carnage, you could not. Because Thatcher's Big Bang would not simply was about financial regulation. It was about globalization, letting the big Swiss, Japanese, and American-owned banks into London. And it was about digitization, removing the need for face-to-face interactions and for trading to become computerized and lightning fast. Today's globalization is in retreat. We've seen the emergence of big regional trading blocs, the Eurozone, the NAFTA, the Asian, and of course China's Belt and Road Initiative. And although those don't stop the cross-border movement of capital, particularly into tax havens, it does balkanize the financial regulation. And Britain cannot remove all the financial regulations it wants, but it cannot become an offshore outpost for the Eurozone unless it starts to align with the EU regulations, and other potential futures are chimeras. As for a digital revolution in finance, that can only be progressed by the de-empowerment status via crypto and consumers, and via the exploratory data damaging of their health data. And how much more inequality and insecurity and poverty is there really to squeeze out of Britain's stressed social fabric? How much more can be cut from the real wages of nurses, teachers, railway drivers, telecom engineers by the size of our current strike wave? The answer is not much. So what is it really about? Enriching the already rich. The banks that now have to hold collectively an estimated 230 billion of people's savings in the form of cash or cash equivalents will now be free to move them into the kind of speculative vehicles which crashed the world economy in 2008. Since Rishi Sunak was one of the prime architects of that crash, the hedge fund that he worked for, triggering the ill-fated takeover of the Dutch bank ABN AMRO, it shouldn't come as no surprise that he wants to be the political architect of the next crash. And although for millions of Americans lost their homes, Britain lived through the lost decade of austerity. It should be noted that Sunak and his ilk got richer after the 2008 crash, and getting rich from other people's misfortunes is, after all, the precise purpose of running a hedge fund. Big Bang 2.0 is only logical if you accept that a hard Brexit is irreversible. It is not a survival strategy for the whole economy, but for a financial elite who can cut themselves adrift from the fate of the ordinary Brits. Reversing a hard Brexit and realigning with Europe's financial regulation and suppressing the speculative finance will be an urgent task for the next Labour government. Let's hope we see one in 2023. And like I say, I hope we see one as well, because, like I say, all these regulations do dramatically need to be brought back in. Absolutely. Labour should make this very, very much a key point of reversing a lot of these key reforms that Sunak has brought in. Because, like I say, a lot of these things allow banks to do a lot of very dangerous things. So at the moment, your bank, you may think your savings are safe, but now this law's out of place. Who knows what the bank's doing with your money? As far as you know, your savings are safe. But if we see, as has been pointed out, we do a dodgy deal with like a company or like another economy, there's no guarantee that your savings are safe. And that's the worrying thing. That is now the worrying thing, that we are now out of these movements, out of these things, the Solvency II, which requires, banks to keep that liquidity. Yeah, if there is a crash, things could go very bad. Very, very bad for a lot of regular Brits. And especially, of course, as you've seen, he also removed the penalties that the people at the top who made these decisions would have to sort of pay the price for that. He's now removed that. So yeah, this is absolutely something that Labour, I think, should make a very key point, and they have been, which I'm sort of very glad about, and have been sort of speaking out about it. But like I say, to sort of make these changes and change them back, you have to be in power to be able to do it, and that is the aim. Next time we come to a general election, we have to get in power to reverse these changes. Otherwise, if we don't reverse these changes, we could see a lot of very bad things happen if there is another global financial crisis. And unfortunately, with the way things are going potentially in China, that could be very likely. So yeah, things could get really bad. So we really got to hope that we do get in the next election, because if we don't, things could go very badly, as I said, if there is another financial crash. So as always, guys, like I say, thank you very much for watching. Please do remember to hit that like, share, and subscribe button. And of course, down below, there are links to my Patreon page and a one-off link called Buy Me Coffee, where you can buy me coffee. And as always, thank you very much for watching. And of course, we'll see you all next time.